Hello everyone, welcome to our channel Good to Go Chief. Today we are talking about something that impacts all of us, nothing but our money. Have you ever wondered why the rupee seems to be losing its value against the dollar? Why does these things happen and what does it mean for you and me? Let's break it down in a simple terms. Let's start with what determines currency value. To understand why the rupee is falling, let's first talk about how the currency values are decided. Think of it like this. The value of currency depends on how much demand there is for it in the global market. More demand equal to stronger currency, less demand equal to weaker currency. This demand is influenced by first trade balance. If a country exports more, its currency strengthens. If it imports more, its currency weakens. Foreign investors. When investors put money into a country, they need its currency, which increases demand. Next, central bank policies. Governments and central banks adjust interest rates and take measures to stabilize the currency. Why is the dollar growing stronger? Now let's focus on the dollar. Why is it getting stronger? First thing, global reserve currency. The US dollar is considered the world's safest currency. Countries hold dollars as a reserve, just like saving for a rainy day. Second thing, high US interest rates. The Federal Reserve, American Central Bank, has raised interest rates. This attracts global investors because they get a better returns. Thirdly, safe haven during the crisis. Whenever there's uncertainty, be it wars, inflation, or a global slowdowns, investors prefer the dollars because it's seen as a stable. Why is the rupee weakening? Now let's shift to the rupee. Why is it struggling? Firstly, trade deficit. India imports more than it exports. For example, crude oil, a major import, is priced in dollars. When oil prices are go up, India needs more dollar to pay for it, weakening the rupee. Secondly, foreign investor outflows. When a foreign investor withdraw money from an Indian stock market, they sell rupees to buy dollars, reducing the rupee's value. Thirdly, inflation and growth. Higher inflation in India compared to the US and a slower economic growth expectations put pressure on the rupee. Fourth things, global factor. Geopolitical tensions like a Russia-Ukraine war affect global trade and make the dollar stronger as a safe asset. Next, impact on common people. So, how does this affect us? Let's look at the impact on first fuel prices. Since India imports oil in dollars, a weaker rupee means higher petrol and diesel prices. Second, imported goods. Products like smartphones, laptops, and luxurious goods became more expensive. Third thing, travel and education abroad. If you planning to study or travel abroad, a weaker rupee means you will have to pay more in tuitions or travel expenses, but there is a silver lining, export benefits. India exports like IT companies earn in dollars. A weaker rupee increases their revenue, which boosts the Indian economy. What can be done by the government? The government and RBI are taking steps to stabilize the rupee. First, selling the dollars. The Reserve Bank of India sells dollars from its reserves to meet the demand and support the rupee. Encouraging the investment. Policies are being implemented to attract foreign investors to increase the dollar inflow. Promoting exports. By supporting Indian business that export, the government can reduce the trade deficit. What are the things to do to protect you? While we can't directly control currency values, we can support local products to reduce the reliance on imports, learn financial skills to protect our savings during inflation. Closing. So now you know why the rupee is falling and the dollar is growing. What are your thoughts on this? Do you think the rupee will recover soon? Let me know in the comments below. If you found this explanation helpful, please like this video, share it with your friends and subscribe to my channel for more such simple explanations. Thank you for watching and see you in the next one.